AI-powered gamma exposure trading. In this presentation, I'll explain how we use AI-driven gamma exposure analysis to trade options markets, with a strong focus on quality over quantity. Instead of trading everything, the system analyzes hundreds of tickers but only trades a small, highly selective subset. This filtering is what allows us to maintain consistent win rates above 65%, rather than chasing noisy signals. The opportunity, why GX matters. Gamma exposure reflects how market makers hedge their options positions. When gamma becomes concentrated at certain price levels, dealers are forced to buy or sell aggressively as price moves, creating predictable market behavior. These effects are especially powerful around key expirations, but only if the data is interpreted correctly. The core innovation, volume over open interest. Most traditional GX tools rely on open interest data, which works for longer-dated options but fails for zero-DTE contracts. Open interest updates too slowly to capture intraday dealer hedging. Our system automatically switches to volume-based gamma calculations for same-day options, allowing us to track real-time market maker positioning as it actually unfolds. Signal quality, removing noise. Raw options data is noisy and often creates false support and resistance levels, sometimes called ghost walls. We address this by smoothing the volatility surface using cubic spline interpolation. This removes artificial spikes in the data and leaves only structurally meaningful gamma levels that institutions actually respond to. Shadow gamma detection. Not all gamma pressure is visible through standard metrics. Some institutional positioning shows up indirectly through effects like Vanna and charm. Our system detects these hidden or shadow gamma clusters and incorporates them into the signal, helping identify pressure zones that most tools completely miss. Technology stack overview. From a system perspective, everything is automated end-to-end. Real-time options data is ingested with low latency, analyzed using machine learning models trained on historical gamma behavior, and converted into signals with probability scoring and risk parameters. The goal isn't to generate more trades, it's to generate tradable signals that pass strict validation. Performance and filtering results. In practice, the system analyzes 441 tickers, but only about 135 to 155 pass validation. This aggressive filtering removes low-quality setups, illiquid options, and neutral conditions. The remaining signals show consistent win rates around 62 to over 65%, with profit factors between roughly 1.8 and 2.7. Why this works? The edge comes from combining multiple layers: volume-based zero-DTE analysis, noise removal, shadow gamma detection, and strict validation. By trading fewer but higher conviction setups, the system avoids overtrading and focuses only on situations where dealer behavior creates a measurable advantage. In short, it's not about trading more, it's about trading with structure and discipline.